Okay, we're going to go ahead and get started. My name is Jennifer Young, and I'm with University Credit Union, and we appreciate you joining us today. Joining me today is Heather Bollinger. She's one of our mortgage consultants.
Hello and welcome.
And we are challenged today to talk to you about financial wellness. It's just an opportunity to kind of check in with you and just some pointers and some things to keep in mind to just make sure that you're in the best possible position. So hopefully some of the things that we share with you today will be beneficial. A few housekeeping items. If you have any questions, type them into the question tab. We'll stop periodically throughout the presentation. We're going to try and stick to this and get through this pretty quick, about a half an hour, maybe a little bit longer, just because there's a lot of information to cover. But if you do have questions, type them in and we'll try and address those throughout. And again, thank you for joining us. We appreciate it. We're going to dive right in, and the first one is budgeting. And I am going to start right off. You've already heard me talk a lot. I'm going to turn it over to Heather and let you talk about what your thoughts are on budgeting.
Okay. You're throwing me off by not starting with everything you did. So
it's so awful.
We'll all start.
The joys of being live.
So budgeting. Okay. On our website, we have a U Money Manager, and on there you can pull up different budgeting worksheets that we have, and we can also email them to you if you send us a request. And what the concept is behind that is to truly track where you are spending your money. So I mean, digging deep, going through your checking account, your debit card, your credit cards, and looking and writing down every single place that you spend money, and then categorizing it. And if you use your Visa with a credit union, from the home banking, there is an already feature there that will break down and categorize the expenses that you have on that you've spent on your credit card, and then you can recategorize things. So budgeting, well, one is sitting down and finding out where your money's going, so then you can sit down and go over what a budget is. And budgeting is something that you need to do frequently. It, depending on where you are in life, that budget is going to change. And let you pick up on that.
Yeah, we talked. So we've talked about, a budget in and of itself is a very personal thing. You really want to identify what your goals are personally, what your goals are as a family. You really want to identify what you're working towards. And for some people, they haven't really identified that. They don't really know what they're working towards. They're kind of just floating through. So my suggestion is really make an effort to identify what are you working towards. And if it is on a personal or on a family level, it's going to have to be reviewed often. It's going to have update, changes happen, things happen, and that budget has to be reviewed often. I would say even, sometimes even daily, weekly, monthly.
Yeah.
If there's emergency situations come up. But most importantly is identifying to you what is important to you. Really make that the focus, and then having that budget to help you really stay dedicated to that. We were laughing earlier, we were talking about a budget is kind of like starting a new diet.
Yeah.
You're really excited at first, and you're really focused, and you're really dedicated, and then after about the first week it fuzzes out, and you have to really find something to keep you focused and motivated on it. So
and that's a good reason to keep reviewing it, because you want it to be something to set yourself up for success. So if you're failing at it, maybe it means that you've got things too tight in one category, or so maybe readjusting where things are going so you still feel like you're living, but you're budgeting.
So as far as the functionality of budgeting, there are so many tools, and that's why I added on this. Budgeting sheets are available online. So I am more than happy. I'm a paper girl, so I like to actually fill out a form. And there are a couple of forms that I found online that I really love that I use. I'm happy to share those with you. If you want to reach out after at the end of it, email us and I'll share those budgeting worksheets. But I'm telling you, your best friend is going to be Google in this situation. You just pull up Google and you can put in budgeting apps, you can put in budgeting spreadsheets, or you can actually put in paper budget sheets. and it will give you sheets that you can print off, and they are a great resource. That way you can find what fits you best. Some people really love to go with an app where it's at their fingertips all the time, and I just couldn't make that work for me. I still reverted back to my paper sheet. So the most important thing is find what works for you and make sure that everybody is on board, everybody that's involved with the budget. If it's your family, if it's just you and your significant other, or if it's just you, make sure that you're agreeing, that you're reviewing it often. And my last tip on that is the fun money, have fun money conversations too. Boy, I'm a big advocate for rewarding yourself for hard work, and you have to have something to look forward to. And me personally, if I have something to look forward to, I am so much more driven to stay focused.
I like what we were talking about earlier. You said you have a vacation coming up, so you might be thinking about going out to dinner tonight, but you remember you have a vacation coming up. So it's like, you know what? Let's cook scrambled eggs at home because I'd rather go to a nice meal on our vacation.
Yeah,
so that's part of budgeting. And
yeah, that's part of budgeting. I'm a big advocate for giving yourself something to look forward to and rewarding yourself for the hard work, because y'all work really hard.
So now we talked a little bit about, kind of what a budget is, maybe how to derive those numbers. Now let's talk a little bit about how to actually set those funds aside. We're going to go into emergency funds, and
emergency funds is it's a great topic. So I have a question for you. Each of you that are participating with the webinar today, if you had to cover an unexpected expense today, an emergency expense, somewhere between $500 to $1,000, how many of you would be able to cover that without going into debt? So I asked that question like you're sitting in a classroom, and I expect to see hands raised. But my question for you is, some of you can answer yes or no. We've had some that have given a feedback yes or whatever, but 35% of people nationwide would be able to cover that expense without going into debt. The more sickening number of that is 65% of people say no, they couldn't. Without going into debt or reaching out to a friend or family member for help, they would not be able to cover that kind of an emergency fund. And so what we would like to do is just help you kind of keep in mind, and some simple ways, just some basic ways to help you establish an emergency fund that would help you in that case, and that you would be able to become part of that 35% of people. So Heather shared earlier, and I'm going to have her share this again. Heather shared earlier what she does, and I thought this was brilliant. I knew I worked with great people, but she was brilliant. So share what you do.
My 5 seconds of brilliancy. Yes. So on my checking account at the credit union, I've set up several sub savings, and I think that you can actually go on your account online from home. You have to be on a PC. I think you can set up additional sub savings, but if not, any of the branches can help you with that. So I've got a sub savings for mortgage. I've got a sub savings for auto, for utilities, for vacation, a couple other things in there. And so I have set minimum limits in each of those categories that I have to have in there at all time. So like with my mortgage account, with each paycheck, I put at least half of a mortgage payment in there. And then I have my mortgage payment pull from that account. I make sure that there's always at least one payment in there. Ideally, I have a couple payments in there. And so what that does is it gives me, I know that my mortgage payment will always be covered, and I've got some kind of slush fund in there, which is emergency fund. So hot water heater went out today, mortgage payment's going to cover that. Other Home Depot runs that aren't expected, I've got a little emergency fund in that account. So I just try and keep it's designated towards just mortgage. So same thing with my car loan. I do half the payment with each paycheck and keep a certain minimum in there. I strive to always have 5 to 6 months worth of payments. Doesn't always happen, but that's a good goal. And then that way, when registration comes due, there's money in there for that. When if you need oil change, you've got money for that. So
Tires,
the
starter.
Yeah, all sorts of things. So it's a way to have emergency funds that are also categorized, and so that you know that you always have your monthly payment set aside, and then you're not burdening yourself with, one paycheck coming up with a full car payment or coming up with a full mortgage payment.
I just think that is brilliant. I think that the idea that you have, not only do you have established emergency funds, but you've identified them. Like you make a little bit extra towards your mortgage, instead of putting it on your mortgage, you put it into a savings account, and you've already
Right.
got any house emergency expense already. I just think that's brilliant.
Yeah, so I actually really don't, I do make a rounded payment on my mortgage, which essentially makes a little bit extra principal, but you're right, I don't actually put extra towards my mortgage. If it was built up enough that I could maybe move a couple thousand over, but I'd rather keep it knowing that I can slap it on my mortgage anytime.
In case of
Or if
emergency.
the roof caves in, I've got that too.
That's
Well, I don't
awesome.
have enough for that, but
So some of the things that we shared with you are, I'm a big advocate for setting up an automated savings, but you need to set a monthly savings on an automatic basis where you're doing it as a habit instead. Once you establish this as a habit, it makes it a lot less stressful to try and establish things like these emergency funds, or to, some of the other things that we're talking about. So set up something on a monthly basis. Second to that is keep your change. We're going to cover the idea of working on a cash basis instead of credit cards. A lot of people can't manage their credit cards. It's just very difficult for some people. And so it just works better to work on a cash basis. And when that happens, keep the change. Don't discard that extra, $1.76 or, whatever it is, that change. It's amazing how people look at $1 bills and change anymore, and they just kind of just devalue them. Heather also had another fun little, and I'm going to have you share that because I thought that was a fun thing. What did your change do for you?
So for years, lots of years, even as a kid and when I've always saved my change, but for the last several years, I go cash in my change jar every year, and when I'm going on a vacation, and I'll use it for vacation fund money. Well, this last year, I found out I was going to be a grandma, so I didn't cash it in for my vacation. I saved it and opened my grandson's account with it, and it was like $235 in pennies, nickels, and dimes, and so got a savings account started for him. And then doing it that way was a lot better on my budget than pulling $200 out of my checking account.
Yeah, then an unexpected $200 hit to your checking account.
So I'll just continue that trend. He'll get my change jars in his account and just won't know it.
Yeah, I think that those are, that's a great idea. Then the other, tidy up your checking account. The point behind this is just making sure you know what is coming in and what is going out. If there are any auto pays automatically going out of your checking account, make sure that you're staying on top of those and that you're aware of it, that you watch those amounts. Companies from time to time will adjust amounts, and you just need to make sure that you're keeping track of those things. And very simple, if there's no money left over after you've gone through all of the expenses, then you need to cut your expenses. Find some way to cut the expenses. Find some way to lower your monthly amounts so that you really are being more in control of your money than having it control you. You might have to get a secondary job. And I know some of you are working 2 and sometimes 3 jobs, and we see that. We see how hard you're working, and we see what's going on. And I get how hard it is, but much better to get that taken care of and get things in order so that you can have a better life down the road.
So we're going to add to the tidying up your checking account. So we covered on this at the beginning last time, so I'm gonna pick this up. So tidying up your checking account also is the same as tidying up your credit card, because a lot of people have a lot of automatic payments coming out of their credit cards. So in your budgeting, when you're looking to see where all of your money is going, how many monthly expenses do you have of subscriptions? How many $6 subscriptions, $10 subscriptions to YouTube, Netflix, movies, gaming, gym memberships? Go look at those. Are you really using those? Are there monthly or annual fees coming out of your credit card or your checking account for services that you've long ago stopped using? So it's just awareness of where your money is going and keeping your checking account and credit card tidy.
So finally, Heather and I have agreed to disagree on the last one. This save your refund. You know, another question that I could ask is, how many of you guys look forward to getting your tax refund at the beginning of every year? For years and years and years, my husband and I have just always looked forward to, and I call it, it's like a forced savings. I love getting the refund. It's just great. But Heather disagrees, and
It's
I
not
think
a
your
refund.
perspective.
It's not a refund. You've been letting the government hold your money. So we'll add to this as far, and we'll bring emergency funds and budgeting into place. So if you're finding that when you are doing your budgeting and just every month you're running short and just finding it hard to keep on top of things because it's just that little bit short every month, but yet you're getting a $3,000, $4,000, $5,000 tax return every year, you need to be adjusting how much is coming out in taxes every month and give yourself a monthly increase so that you don't keep going into the hole while you're letting the government hold your money.
So the key to this is really find what works best for you. If it would work better for you to have dollars in your pocket through the year, then you need to assess and adjust your contributions. If you're like me that looks forward, it's a forced savings account. I don't really care that the government has access to that little bit of amount for whatever. It's whatever works best for you. And I think that the moral of the story that we're trying to convey is the more that you are aware and the more that you are involved with your finances, the more that you're involved with what's going on, the better that you can succeed, and your financial wellness will improve. We're going to move on, and our next one is credit reports. And you know, Heather and I both agreed we could spend hours and hours and hours talking about this, but we are going to share a quick video, and we're going to cross our fingers that this works. If it doesn't work for some reason, not to fret. I'll have you copy the link and you can watch it, or we'll send that to you at the end of the thing. Last webinar, it didn't really work well. The sound didn't work well. So we're counting on you guys to give us feedback and let us know if you can hear the sound on this. So James, take it away. Let's see if this works. Nope. Dang it.
Darn it. All right, so we'll still talk about credit scores, credit reporting a little bit. And then we also have this link available. It'll be in the email that will go out, I believe. Okay.
Yes.
So as an adult, the credit report is our report card. It's something that it's what lenders use to help determine credit worthiness to be able to lend credit. So as much as the trend today is to try and pay cash for everything, you still need to have a credit report. There are a lot of apps out there that will show you your credit score or show you a credit score. What that score is a trend of what your credit score is doing. So when we pull a credit report, it's what I call a fully loaded credit report. It has a lot to it, and oftentimes can be a different score than what those apps are showing you. But the apps still serve a purpose in showing you where the trend is going. So if you all of a sudden see a 30-point drop in your score, something has just happened and you need to check into it. If you see a jump and you've been paying off credit cards or paying off debts, then your score is going in the right direction as you intended it to.
So credit reports are kind of a moving target, this credit score, but the most important thing is to really, again, come back to know what your goals are and what are you working towards, and is the impact of your credit going to influence that? Your credit scores are a really powerful thing when it comes to obtaining, to reaching out and attaining goals. If you want to buy a new car, if you want to buy a new home, if you want to buy a vacation property, I mean, it really isn't limited to a certain group. It's everyone across the board. I wonder sometimes if you understand the full impact of good credit and negative credit and the expense overall that it can really cost you. Let me just give you an example when I talk about that. If you're young and you're just establishing credit and you have had a few bumps, got convinced that it was a great thing to get 17 new credit cards that they sent you the request in the mail, and all of a sudden you find yourself in a situation where you've got a credit score that's, you know, in the low 600s or even in the 500s, then you're in a situation where you've got negative credit. And every person that you go to, when you go to get car insurance, when you go to get renter's insurance, if you're renting, if you're going to buy a home, every one of those institutions or companies evaluates you based on a credit score. It's unfortunate, but it is what it is. That's the way that they base their decisions on what you get. Interest rate wise, if you go to various companies, the stores like, I don't know, Best Buy, retail stores.
TJ Maxx,
yeah,
every single time they ask me if I'm going to use their awards card. I say, yes, I am using an awards card. It's just the credit union's awards card.
But all of those companies base their decision what they're going to charge on your interest rate by your credit score. And so the better the credit, the less you're spending, the more you're saving, and the better your financial wellness is. And so credit can really be a huge impact on your overall health.
Yep. So we were talking earlier about the impact of negative credit reporting. There are lots of negative impacts, and one of them is overall health.
Lack of sleep.
Lack of sleep. Being afraid to answer the phone, being afraid to open the mail, and just the weight of it being on your mind that you need to take care of something. So there are a lot of negative impacts and positive impacts with credit reporting. So the goal is to have it be as positive as possible.
So we included in this link the annualcreditreport.com or a phone number. Some of you would prefer to do it online. Some of you would prefer a live person. Either one, you are eligible to get a free report once a year. And I would highly encourage you to just check in once a year, see where things are, make sure that you're staying on top of and being the responsible person looking in, making sure that you're doing your part to make sure your overall financial wellness is being addressed. And we're going to jump in and move forward into debts. Like I said, we could talk about this all day, and we try really hard to be respectful of your time, and time is clicking way too quick. So on debts.
So debt is so the definition is that debt is money owed by one party to another. And so we can read that really fast, but it can get complicated fast. Debt can be a useful tool or baggage complicating your life. Knowing how to handle your debt can be tricky, especially if you're struggling to cover monthly payments. There are different options for each kind of debt. Here are some of the most common debts. So what we've put down here, or what Jennifer put down here, she was so good at it, is she put the common things that are going to show up on your credit report. And so this doesn't include things like utilities and groceries and stuff, because those aren't debts. So this is debt. Debt is money owed to others. The only other two things that we thought of that aren't on here is possibly alimony or child support.
You know, the biggest reason that we wanted to address debts, twofold. One, we want you to understand what is a reasonable amount of debt. And so I'm going to cover that and give you an idea of a reasonable amount. A reasonable amount when you go to buy a home or buy a car, when you're borrowing from a financial institution, they are going to look at your gross income versus your overall monthly payments, and you need to keep that somewhere in the range of 42 to 43%. 42 or 43% of your gross income.
as an absolute max.
That is the absolute maximum. Some of you will look at that number and go, that is way too much. And I applaud you. I think that is awesome. I hope you keep that attitude. Some of you will look at that and go, oh, we're upside down. We owe a lot more and our ratios are out of control. So that being said, I'm going to have Heather give you some ideas of how you can alleviate. One of our biggest questions is, how can I get out of debt and stay out of debt? So,
so you need to come up with a plan, figuring out your budget and all of that. And then the biggest way to stay out of debt is stay committed to your plan. And if the plan is not working, then just like your budget, you need to reevaluate it and make sure that it's a plan that you can succeed at. So say you have 6 credit cards out there. One way to eliminate those credit cards is to use the snowball effect, and that is to make your minimum payment on 5 cards, take the smallest card, say it has a $300 or $500 balance on it, and do what you can to knock that out in 1 month, 2 months, 3 months. Set a specific goal to knock out that one card, and then bam, your life is a little more simple. You've gotten rid of one of those, and then after that one's gone, you've got 5 cards left. Now make minimum payments on 4 cards and knock out the 5th one as best you can. If you find that you're putting too much on those cards and it's forcing you to have to reuse a card, then slow down about how much you're putting down. You want to make sure any new expenses that you have are not going on to credit cards or going on to lines of credit, that it is not a new debt for new expenses.
I just think that those are some really great tips. I know that when I was younger, I would have really appreciated somebody telling me about that. They call it the snowball effect. You know, I can remember paying a little bit extra on, 5 or 6 different accounts and thinking I was chiseling away at it, and how much more effective would I have felt if I would have been able to pay one off sooner. And it's crazy. That's such great advice. So thank you. The biggest thing again, here it is, educate yourself, make sure that you're trying. This link that we've shared in the webinar also is another little video that will show you just some additional tips to get out of debt, and I believe out of debt, and it also addresses the snowball effect. So we're going to move on to planning for the end.
Planning for the end. So everyone is like immediately jumps to retirement. That's not what we mean.
Or to death.
Or to death. Or to death. Yep. And that's not what we mean by this at all. There are many ends and beginnings throughout life. So maybe it's the end of high school and starting college. Maybe it's a child's ending high school and starting college. It's, transitioning from part-time work to full-time work. You're maybe, transitioning from work to retirement. Kids entering the home, kids leaving the home, empty nesting. So there's all sorts of beginnings and endings. The purpose of all that is just to get you thinking about different things coming up in your life, which then takes us back to budgeting and taking all of this into consideration and why the budget needs to be reviewed frequently. Sometimes it may need to be reviewed more frequently. Sometimes it might be good once every school year.
It's a vicious cycle.
It is.
The most important thing that we want you to get from this is that we really are here to help you succeed. We want to make sure that we are helping and answering questions and giving you different options to help. We know that things are constantly changing, and again, planning for the end. Probably the most common question that we do get is, how do we plan for retirement, and how would we successfully be able to retire? And again, it comes back. I loved Heather's, her one word is commitment. It's really not only getting good advice and having a plan, but then it's actually being committed to that plan and really staying the course and being focused. We, just a side note, we do have here at the credit union, we do have financial planners regarding the retirement. We do have some great guys that are willing to sit down. Those consultations are free. You can schedule an appointment, sit down with them, and get some great counsel, great advice, and great options. So I hope that you'll take advantage of that too. Is there anything final that you want to add?
So I was just kind of looking at one of the questions that we had earlier, and it's the best way to have financial freedom. I had a good conversation with a younger member the other day. He's in his early 20s, and he had this thought that he had an $800 bill on Amazon, and the monthly payments were like $30 or something, and it would be paid off in 2 years. And he felt that as long as he could make that monthly payment, that he was doing what he should do. And I brought to his attention that he's going to have more expenses coming up. And if he keeps adding those monthly payments and adding those monthly payments, he's losing his freedom, and he's also losing the cash flow because he's going to be tied up in monthly payments. So financial freedom, get on top of what you have. If you've spent the money, move forward, make sure that that debt is paid off, and look at trying to pay for things as you go, meaning that on a monthly basis, you're paying what you're spending. If you have larger ticket items, then figure out a budget, a certain time frame that you're going to have that paid off, but that it's not taking you years and overlapping when you're going to have other expenses occur. You want to have freedom from all of those payments, and know that when you have another emergency come up, that you have those funds available.
It's great advice. Okay, I'm gonna look over again to see if there's any questions. We did have a couple of questions. One of the questions was, how many sub savings accounts can you do with a credit union? You know, Michelle, that's a really great question. There are no limits. You can open up as many savings accounts as you would like. So hopefully, if you haven't already got a couple set up, Heather shared her idea. I think that was a brilliant idea, and I think I'm actually going to go and open a couple more accounts and start doing that. Was a great tip. So there's not a limit. You can open them up at any of the branches.
We say that, and then you go in and the parameters are like, no, we capped you.
And one nice thing that I think a lot of people don't know is you can actually name your savings accounts. So you can go in, it doesn't just have to be the account number. You can go in and actually put a name on it. So you can put house account, car account, whatever. So I thought that was a really great tip too.
Yep,
And then I'm trying to think. I know that there were a few other questions, but you know what? They escaped me. My biggest thing is we just want to say thank you. Again, we're your mortgage team. And I know it seems weird to have a financial wellness presentation by your mortgage team, but you know what? We deal with people on a situation where they're buying the biggest investment of their lives, and we see a lot of these things. And so sometimes it's fun for us to share our thoughts and our things that we see on our end. So if you do have any questions, you know to reach out to us at the ucreditu.com, or our direct line is the 481-8840. And anytime you call that number, one of us will answer. We look forward to working with you and working through some questions and concerns. And we appreciate you being with us. Thank you so much, and enjoy your afternoon.
Thank you for spending time with us.